Welcome to our demo of the Atlas Capital Management Online Retirement Plan. Our online retirement plan will show you in a very short amount of time just how much money you will have at retirement, when your funds will run out, what you can do to make sure you don't run out of money after you retire. The planning software we use is so user-friendly and so intuitive that it makes online retirement planning possible. You will see in real time just how all of your funds change and when your money runs out as we change assumptions on the fly. The first thing I want to show you is how we can enter very simple and quick assumptions on the screen to get a crude first look at where you stand today. We'll start by entering the client's age. I will change some of these other assumptions on the fly. The retirement age will be 65, income 80,000. We now enter the assumed raise that happens every year. We need to enter amounts for tax-deferred investments, the annual contribution percentage, how much the company matches in terms of percent, the total return assumption for before retirement and after retirement. Then we will enter the taxable investments. We need to enter the full amount of the taxable investments as it stands today, the annual contribution, and again the total return assumption before retirement and the total return assumption after retirement. We also need to enter a Social Security benefit assumption. We can help you estimate what your Social Security benefits will be. We can do that outside of the software. There's also room to enter tax-free investments or any pension or defined benefit assumptions. We are going to leave those at 0 for this demo. Now we need to start entering some assumptions for our expenses. The easiest way is to enter retirement income goal and then some assumptions about the inflation rate and tax rates as well. Now we can make this much more complicated and robust by entering these into the special expenses spreadsheet, but for the purpose of the demo we are just going to simply add these right here. I want to take a moment to explain what is happening in the graph above. As we change assumptions, you can see the graph above changing. What the graph is showing is how your funds change every year based on the assumptions we've entered. And perhaps most importantly, it also shows when your funds will run out in retirement. We can now look at your total goals and expenses above. That's your total goals and expenses for the year. How much money must come from principal, how much must come from investment growth, other income, any pensions, and how much is going to come from Social Security. Now, as you can see, we have not run out of money yet in year 1 of retirement. Now we can look at each and every year after retirement by just moving the cursor along until we get to age 85, which as you can see is when this person actually runs out of money. This is extremely important, and we can see by the red in the graph that this is the shortfall. This is the amount the person will be short starting in age 85. This is where our retirement planning really pays off. We can begin changing assumptions such as your savings rate, your year of retirement, and your expenses to see if we can shift that year that your funds run out further into the future. By doing this, we can come up with a solution that will give each person peace of mind that they can actually accomplish their retirement goals and not run out of money. Now let's start changing assumptions and see if we can push out the age to when our funds are depleted. Let's change the annual contribution to our 401k plan to 20%. We can see immediately that we gain an extra year from age 85 to 86. Now let's change the retirement age from age 65 to 68. So you can see that boosts us out quite a bit to age 92. Notice that we can always see the graph as well as the year our funds run out changing in real time. Now another idea, of course, is to just simply save more money. One way we can put in extra savings is to go to the cash infusions spreadsheet. Here we can enter what I've called extra savings, and I'm going to try and save an extra $7,500 a year. That will grow at 5% a year, and I'm going to do this for 10 years. it will be taxed at 28%. Now when we go back, we can see that we've gained yet another year in terms of when our funds will be depleted. There are a few things that we did not go through that I will brush over very quickly. There's the investment spreadsheet where we can be more specific with our investments. We can enter things like stock funds, bond funds, real estate. We can be as specific as we want in terms of the value and the return assumptions. And you can enter as many as you want here on the spreadsheet, and it will override what we've entered on the screen previously. There's also the idea of special expenses, where we can put in as many expenses as we want through time. And then there is the savings graph, which shows how our savings change through time and when our savings will run out, which of course matches up with the main graph we've been looking at all along. With this retirement planning software, we can run multiple scenarios, change multiple assumptions, and give you a very good idea of when you can retire and how your plans might change if your investments do well or if they perform poorly. The most important thing one can get out of a retirement plan is figuring out when their money will run out and what they can do to prevent their funds from running out too quickly. Our methodology presents an easy-to-use, intuitive, and interactive way to help you better understand if you are on the retirement path that you desire. Once we are finished with the retirement plan, we can of course go and print out the details. This will be converted to a PDF and emailed to you. And of course, anytime we change any assumptions, we can reproduce the graphs and print out a new PDF. I hope this demo has been helpful. Please contact us with any questions.